Welcome to THIVE, a Paychex business podcast. Your blueprint for navigating everything from people to policies to profits. And now, your host, Gene Marks.
Everybody, I'm here with Justin Miller. Justin is the National Director of Wealth Planning at Evercore. So first of all, thank you very much for joining me.
My pleasure.
What does Evercore do?
Evercore, the division I'm a part of at Evercore is wealth management and trust administration.
Okay.
That's all we do. Evercore Wealth Management and Evercore Trust Company, investment, wealth management, financial planning, wealth planning, and we serve as trustee. We can do it in Delaware, California, Florida, Minneapolis, New York, you name it. Evercore itself sort of has three big groups. It's a boutique investment bank.
Okay.
It also has Evercore ISI that does a lot of great investment research, stock research.
I'm trying to figure out, maybe I should know. So are you a CPA as well, or are you a non-CPA?
Believe it or not, even though a lot of my best friends are...
and they're all good people.
I do a lot in the accounting world. My background, actually, I'm a tax attorney by background.
Okay.
But I do teach in the MST program and LLM program at GGU.
All right, great.
Golden Gate.
All right, that's cool. So we're here at Engage.
Yes.
You are speaking tomorrow. Let me get pre-liquidity tax planning for the sale of a business.
Yes.
Talk to me a little bit about what that session is going to be like.
Well, the first thing is let's hope that we can help business owners do some pre-liquidity planning before the sale of a business. And it's always a challenge. Certainly, there's plenty of planning you can still do once that business is sold.
Well, I'm gonna interrupt you.
Yeah.
So pre-liquidity means like
Before you sell.
How can we get some cash out of the business before we sell? Is that
Not
what
even
we're
cash
saying?
out of the business. You're about to sell. Whether it's in a year from now, 2 years from now.
Okay.
Sometimes it's maybe only a few months from now.
Yeah.
And it's about income tax planning, gift and estate tax planning,
Good.
generation skipping transfer tax planning, and there's so much more that you can do before you have that letter of intent, before the due diligence process, before that deal is a virtual certainty,
Sure.
before you close. It's a huge opportunity for all types of tax planning.
Before I get into some of the main questions I want to ask you, I have to ask you this: if you're doing tax planning before you sell the business, give me an idea of like some of the advice that you're giving to that you'll give to your audience. Like one or two things, like you should be doing this.
The answer, once again, I'm a lawyer by background.
By the way.
Always
It depends.
But there are definitely things you want to look at and consider. I mean, do you have qualified small business stock? Is there a charitable or philanthropic component?
Right.
Do you have children or grandchildren or nieces and nephews that
Right.
you want to set aside? And ultimately, we start with, first, you got to start from the beginning. Personal balance sheet, and then you run a cash flow or lifestyle analysis. How much money are you, and maybe you and your spouse, going to need for the rest of your lives?
Okay.
But for some of these bigger business sales, there's going to be enough money for children, maybe grandchildren and beyond, enough money for charity, and why not be as tax efficient as possible?
All right, that is great. If this question is something you can't answer, don't answer. I don't know if you work with trusts very often and what's involved, but I always say to my clients that they should be setting up trusts as early as possible. And I was wondering, first of all, if you have any thoughts on the value of setting up a trust. Is that something that you recommend to all of your clients? And again, if this is something I'm just curious if you have any thoughts on it.
No, I literally, the course I teach is the income taxation of trusts and estates.
Okay, so it sounds like we're going down the right road here.
If we had another 12 hours, I could talk about trust. I'm from California, so California has one of the worst probate systems in the country, maybe the world. I don't know. I haven't really looked at every country, but at least in this country. And one of the simplest ways to avoid a probate proceeding, which is, your judge could have been a family law attorney or traffic court judge the last week, is to do a revocable living trust.
Right.
So almost every, if not every client that I work with is going to have a revocable living trust, at least in California, not every state, but there's reasons to do trusts having nothing to do with probate.
Right.
It could be about incapacity. What happens when you get older, who's going to take care of you. You can actually lay out instructions for the type and quality of care that your money pays for.
Yeah.
Privacy and confidentiality.
Yeah.
And that's just your revocable living trust.
Right.
For wealthier families, when you start getting into estate, gift, GST, generation skipping planning.
It's credit shelter trusts.
Irrevocable trust planning. Well, some of them, you have bypass, you have marital trusts that are different. So yeah, that is a bread and butter of what we do.
Having a trust is... it used to be, I don't know what to say, but it used to be, but a lot of it was driven by taxation and avoiding my understanding was on a trust is that the assets, as they appreciate once they're in a trust, wouldn't get taxed. But now that, because of tax legislation that's out there, the exemption on the federal level could be pretty high for a lot of our clients, where that becomes less of a priority. And the priority for having a trust is more, like you say, control, to avoid probate, to avoid certain liabilities. Is that a fair statement?
I would qualify that. So I think it's fair. There's lots of reasons to do a trust. I would go even farther back and say traditionally a trust was you didn't trust your kids. You didn't want them to have the control of the money. That's where you got this idea of trust fund kids and all, and the money would come out. But yes, certainly it's for, you've got a balance now, even with wealthy families. Do I want to avoid estate and gift tax, or do I want to get that second step up in basis? In California, at each community property states, you get a second step up in basis after the first spouse dies.
Sure.
For a lot of our clients, one of the top reasons for setting up a trust, regardless of huge dollar amounts, maybe you don't have gift and estate tax issues, let alone GST. It's not that you don't trust your children, oftentimes adult children, even adult grandchildren. It's that you don't trust other people.
Right.
How do you protect your kids or your grandkids from potential creditors, potential divorce down the road? Right. That's probably the top reason that a lot of our clients would maybe set up trusts, regardless of the tax benefits. It's, I want to make sure this money is protected for my children or other loved ones.
I work with a lot of small and mid-sized businesses, and most of our audience for this podcast are small and mid-sized business owners. The biggest asset that I find, and I think this is backed up by data for a small and mid-sized business when it comes time to sell, is usually their property. They own real estate, they own land, they own the building, they whatever, which is great. I have more and more clients, and I just wanted to get your thoughts on this. You talk about tax planning, as it is, that are remortgaging or refinancing portions of their property to take cash out of the business that they can spend and live off, as long as the business can afford to pay the debt on that. And also with the caveat knowing that when they do come to sell the business, that liability will, but it gives them an opportunity to get money out tax-free, because it's a loan, it's not income, to finance their lifestyle or to do other stuff. What are your thoughts on that? Do you see your clients doing that? Do you ever recommend clients with that strategy?
So the idea of using leverage is a great one. Where are you going to come up with the cash? Are you going to sell a piece of property? It's not just for people that own real estate. It's for people that have highly appreciated stock portfolios.
Yeah.
If you could have $10 million in the S&P 500, but if you sell it, you're going to get hit with a federal capital gains tax, maybe a state capital gains tax.
And isn't that the reason why, you read about the 1%ers of the world, they pay much lower taxes because they borrow against their assets.
Oh, absolutely.
Right?
And it's one of the best things you can do. The other thing is, getting back into putting all these pieces together, you borrow against your assets. It's not as powerful right now because interest rates are a bit higher, but still the idea of not having to pay tax on your assets right now. The other thing is the famous step up in basis after you die. The capital gains disappear. Now let's just hope, once again, with any kind of business owners, you're not sticking your real estate in an S corporation, but let's assume you've done your planning correctly.
Right.
That real estate, that stock portfolio, if you own it, the capital gains, regardless of gift and estate tax, if you've not set it aside and gifted it out already into one of these irrevocable trusts, if it's part of your estate, no capital gains. You get to restart the clock.
Yeah.
And so why would you sell something while you're alive, pay a huge federal and state tax bill, and miss out, and your family misses out on that step up?
Great advice. Great advice. All right, let's talk a little bit about technology, okay? So
I could talk about tax, by the way, for the life. I'm getting excited
here. You do realize that we have lost our entire audience just by this conversation, and you still got me. I'm riveted to this.
I think we still have 100 people on Twitter/X that are going to love that part.
Right.
But okay,
they tuned into the wrong channel. So, are you over the years, you work with CPA firms, you work in a good sized wealth management firm. How has technology changed? How has it impacted your job? How has it impacted even the firms or clients that you work with?
Not only has it changed, right now with AI, the big buzzwords, it is absolutely not only has changed, but will continue to change, and it's changing more rapidly.
Right.
And I think at this point, hopefully everyone's heard the saying that it's not that AI is going to replace our jobs, but people that know how to use AI are going to replace our jobs. The good news for tax is that you've got guaranteed employment. AI is not going to replace that individual human element of a tax, person to person. It certainly will make more efficient some of the more repetitive tasks, onboarding, some of the more commonplace compliance type issues. But one of the things I found with AI is that not only can AI be wrong, but it can be absolutely convincingly wrong. When you read that answer, it's written better than I could ever hope to do it in my entire life.
And yet it's incorrect.
But it's incorrect. Yeah. And and that's going to be the biggest challenge.
Come on, it's early days with AI, right? Yeah. So we're seeing that it's hallucinating now. I mean, let's go into the assumption that it does get better and more accurate, okay? Mm-hmm. Couldn't an AI model do your job? Say I'm looking to want to sell my business, whatever, and I want some advice. And I go to the chat GPT of wealth planning and I start putting in my personal information. Does that make you in any way fearful of your profession?
Not only does it not make me fearful, it makes me more secure in my role.
Good.
I think it's going to replace bad advisors. Okay. The people that like to just throw out a bunch of things against the wall and see what sticks.
Okay.
And that's how do you think, some of these bad plans get done? Are people throw it, you should do a charitable remainder trust. But all the intricacies. You can't do a CRT with an S Corp. Maybe the S Corp can contribute. Sure. A lot of these tax promoters that are doing not just questionable tax shelters, I'm talking about illegal, aggressive tax shelters, you're going to get AI providing very boilerplate advice.
Right.
And it's very hard. In this world, we have to customize for each and every situation.
Sure.
And just that human interaction of being able to distinguish why, yes, that could be a good plan, but it's not the right fit for you, and here's why. Those details, I don't see AI replacing that anytime soon, but I think it will be an alternative to some of, let's call it, sort of inexpensive, cheap boilerplate, the people that aren't at a conference like this learning how to do it correctly.
Understood. What technology do you use in your job?
I love Excel. I'll tell you, even to this day, I am a huge Excel. Anyone that's on social media probably have seen. I don't just tweet about or put X posts in LinkedIn. I'm a big fan of Excel, but we use all kinds of programs. I mean, I'm not on the investment side. Most of my colleagues are. But for me, ultimately, we have financial planning software.
Sure.
We've got all kinds, but a lot of the stuff is done by hand, customized. PowerPoint, we do a lot of flow charts. A big part of my role is working with the lawyers and the accountants in trying to simplify it and explain it to the clients and putting the real numbers in. Not, what if you got a 5.5%, 6.5%, 8.5% return? It's, here is the portfolio. You're actually going to have the real asset allocation. So the risk involved with it. So we're not just, yes, we're still guessing, we're still doing a projection, but our projection we're going to at least attempt to be as accurate as possible in a real life scenario.
So Justin, when you were 10 years old, did you want to be a director of wealth planning for a global wealth management firm? Is that what you were thinking you wanted to be?
I think the one thing probably most people who knew me at 10 years old would
you
not...
You want to be a professional baseball player, right?
No. You haven't seen my lack of athletic ability. No, believe it or not, I did play varsity sports in high school. Clearly where I peaked, I was lucky enough to make varsity. No, professional sports were not in my future. But if you talk to anyone that knew me at 10, I don't think they would be surprised at all that I became a tax attorney. But I will tell you an interesting fact, though.
Go ahead.
My elementary school, these were people in my class, not just that went to my school, famous rappers. I had several famous rappers that went to my school, came out of my same...
You grew up in LA, right?
Yes, I grew up in LA, public school, so it could have gone either direction, tax attorney or rapper. You never know.
And for all we know, maybe you are doing that on the side. We just don't know about it.
You're lucky.
The reason why I ask you that question is because most people do not dream of being a director of wealth planning at a global wealth planning or financial management firm, which gets me to recruiting.
Yep.
How do you find talent? What are you guys doing right now to make your firm the kind of place that people want to work? Where do you think that's going?
So I can give you, our recent experience, my firm in particular, and then I'll make it more general. And that is, we like to hire people who are experienced that already know what they're doing.
Okay.
We're a boutique firm. We're partnership owned.
Okay.
So a lot of us had experiences at many of the major big banks. and they've seen how it was done, the big bureaucracies, and they wanted something that could be more cost efficient,
Sure.
more high touch services, flexible, nimble, and at a lower price. I mean, it's the greatest deal in the world for clients. So a lot of those people, it's really a nice alternative to some of these big banks with high turnover and that kind of thing.
Sure.
So that's where we get most of our kind of big hires on. But where I'm seeing a challenge, though, especially with the accounting firms, is where are you going to find the next generation of accountants?
Yeah.
And this is a problem. I travel a lot. I have clients across the country.
Yeah.
I work with great accountants across the country. It is a pervasive problem at this point. And
Do you
it's
have any
just
solutions to that? Any thoughts?
Absolutely. I can solve the entire world's problems. No, I wish. If anyone did, I know a lot of states are working on bringing down the education requirements. But what I would say is I think the solutions focusing at the college level, there are a lot of people in college right now coming out that can't find jobs.
Yeah.
And it depends on I don't think there are a lot of future CPAs coming out of school right now. There are plenty of jobs for people studying accounting. And it doesn't just have to be in an accounting firm. We love people with accounting backgrounds on the wealth management and trust side. What a great potential colleague. There's a lot of places. Businesses always want people with that financial background.
Sure.
And I think as more and more students in college realize the classes that they're taking, if they focus in on accounting, I mean, it's almost guaranteed employment. They will need you. And even if you don't stick with that specific career, there are a lot of other options where that background is invaluable.
You know, you mentioned, and you bring up a good point about you guys look for people that are experienced. Like you want people that come with skills. I talk to some people that have like the opposite point of view, and it depends. Like, here's your attorney answer. Depends on the business, right? So I know one guy, he sells windows and doors. And when he goes out looking for talent, it's like if there's like a good server at a restaurant that has a lot of energy and you know great people skills, whatever, I can teach that person how to sell windows and doors, right? Not the case in your business, though, right?
It's always a risk. I know there's a certain philosophy of I want to hire that person and teach them how to do it right.
Right.
Just because someone has 10 years of experience, they could have 10 years of experience doing it the wrong way each and every year for 10 years.
Yeah.
But it depends what type of role you're looking for. And certainly at the most junior roles, absolutely. We can hire someone with very little experience out of school on more of the analyst level positions.
Sure.
And they have great training opportunities and they can grow into the role. But when you're working with clients, and our minimums start at $10 million of investment management, and you just need a level of knowledge and experience to be able to manage. We're talking about people's life savings.
Yes, of course.
And you do not want someone, in fact, no client is going to want someone without the requisite background to, this is all they're ever going to have. Yes, you sometimes have serial entrepreneurs, but for most people, once they get their wealth, it's about preserving it, number one, keeping it, protecting it, and then number two, growing it.
Yeah, of
but
course.
they don't want to lose their money.
So talk to me a little bit about the culture of your firm. I mean, is it a good place to work?
I love it. I certainly do. I would hope
everyone
everyone
does. I was not expecting you to be like, no, it's terrible. We ain't working there. Why is it good? Like, what do you guys do you think that is unique to your firm? Or what kind of an atmosphere do you guys provide?
You know what's great? I'll even go from, like I said, a lot of the people from my firm have had experiences elsewhere. And don't get me wrong, every job is a job. Yep. There's always going to be pros and cons, and there's going to be frustrations. But at least if you've experienced work elsewhere, it's better than most other places you could work with. And having a job is still having a job. There's ups and downs. But what I really like is that I mentioned that flexibility, that ability to be nimble. A lot of big banks, when you start getting to the big bureaucracy, you'll have, let's take trusts. Someone comes in and they could use help with a professional trustee. You might have to wait around for a month even to get a no. The committee meets. They don't want to take any risk. If it doesn't fit into the perfect box, they won't do it. In my firm, it's a discussion. We meet every single Tuesday as a trust committee.
Right.
We will meet in between. If it's a rush and someone's selling a business, we'll meet on a Saturday. But we will get it done. And some of the things that we can get done just by having a conversation, sometimes it's just a matter of what's the real risk involved? What's the business risk? Can we do this? And it brings up us managing. We've had someone, unfortunately, didn't do their planning, died and has an operating business. Who's going to run that business? Who's going to find a CEO and a CFO? We could take something like that on. Trusts that are in litigation. No big bank wants to touch any, that's just, getting involved with courts. If they need a corporate trustee, we'll take on, what I always like to say is, we'll take on something that has a little hair on it. If it has hair on it, we'll still consider it. If it has a ponytail, no, that might be too much.
Would you recommend getting a wealth management firm out of your state? Like, I live in Pennsylvania. Would I work with you guys? I mean, you're a California firm.
We're not a California firm. We're a national firm.
Okay.
But when it comes to trust, what I would recommend and what I love, I'll tell you, California, not only the highest income tax rates in the country, some of the absolute worst trust laws in the country.
Okay.
California. From not just a state income tax perspective, but even the benefit of all the bells and whistles that you can do with the trust, such as what are called silent trusts or secret trusts. Maybe you don't want your kids or grandkids to know about the trust until they're a certain age.
Right.
Maybe you want better asset protection. We like to do our trusts out of Delaware. So regardless of where you are in the country, so we're based in New York, we have California, Minnesota, Florida, but Florida has pretty good laws. But when it really comes down to it, we'll do our trusts in Delaware for that reason.
So the takeaway is, if you are looking for a wealth management firm, you want to look for somebody that has a presence and knowledge nationally, but you don't have to be restricted by just working with somebody within your state.
Exactly. In fact, I'd even go so far, and this is a real challenge, even with some of these bigger institutions where they have the capability to offer something like Delaware, but their local firm doesn't get paid, their local team. The other nice thing, you're asking, why do I like where I'm at, is we don't base compensation on, if you do it in Delaware, I don't get a commission. There's none of that going on. We all work together at my firm for the client.
Okay.
What's in the client's best interest? And if being in Delaware, there's no additional cost.
Okay.
You could do it in California, you could do it in Delaware. And if Delaware makes more sense for the client, that's where we're going to do the trust administration. And it's not going to impact me financially. It's not going to impact my team financially. So it's a much better structure to do what's right for the client.
Only a couple more questions for you. You work with CPA firms.
Yes.
You're here at Engage, so you know CPAs, you are dealing with them. What type of firm catches your attention that they're really doing good stuff? You walk away and you're like, these guys they're well positioned for the future. I like the way they operate. These are like a decent firm. Like, what, tell me a little bit about like what kinds of firms really get your attention.
It's really about the tchotchkes with their names on it. No, I'm kidding. I'm kidding. For me, there's a lot of great firms out there. It's the same accounting firms, same thing with wealth management firms, same thing with law firms. And don't get me wrong, and a lot of them, they have great names and great reputations.
Sure.
But the ones we want to work with, it's not the firm. It is absolutely, and it's the same thing for every one of our clients. When we work with our clients, who are the lawyers you're going to work with, who are the accountants? Yes, we want them to be at a good firm for sure. But it's the individuals that matter.
Okay.
It's the individual professionals. Our clients don't sign up with a CPA firm.
Right.
They sign up with an accountant at that firm or a team at that firm. And it's no different than our wealth management firm. There's a lot of great names out there,
right.
A lot of great places. But ultimately, that client is signing up with individual people. And I think maybe where you might be going is what I see most successful accounting firms, law firm, wealth management firms are the ones that realize that it's not just their name and their brand that's important.
It's a personal relationship.
Yes, it's those individuals, because those individual professionals are the ones that are retaining the clients.
Yeah.
They're the ones bringing in business, and they're the ones keeping the clients at the firm. They're the ones getting the referrals from the happy clients. And I think the firms that focus on individuals at the firm are the ones that are going to be the most successful.
And it's tough because a lot of firms are trying to standardize a lot of things and homogenize things. And they want to build a structure where, if we want to sell the firm one day, it's an asset that somebody else could take it over and it just rolls with it. But then there's this balance, because you're right. Clients don't just want a form-filling, standardized organization that they're dealing with. They want to deal with you. You know what I mean? Like, you're my guy. And it's evidence that if you ever left your firm, not that you would ever leave your firm, if I'm your client, I'm going to go with you, wherever you wind up to be. So it's just a balance, I guess, the firms are always going to have to deal with.
It is a tough one. And maybe on the lower end where it's been more commoditized.
Yeah, okay.
If it's just you're
it's
dealing
like a bookkeeping service.
you're churning out thousands and thousands of identical things.
Yeah.
But when you're working with high net worth families, individual people, they want to know the individual professional. My clients, they know that if they need me on a night, on a weekend, whether it's me or someone else on my team, I mean, I don't work all the time, but we have backup. They know the people on the team. They don't dial 800 numbers.
Got it.
In fact, when they call, the person who answers the phone knows who they are. They already have that full background. That's what clients are looking for.
What if you're rapping on the weekend, though?
If I'm rapping, that means something went really wrong.
We're really right. It depends on how you look at it. Final question.
Yeah.
Go back to college when you graduated. You could talk to your younger, better looking self and give yourself advice. What advice would you give?
That's a tough question. So let's see, back in college.
And by the way, I'll give you some time to think while I opine on that. When you say that's a tough question, it's actually a very good response because that it really means that here you are in your life right now. You've made decent decisions. I'm not saying you're batting 1,000, but like you're pretty good with where you are. So the fact that you're saying that's a tough question, you're thinking to yourself like, I don't really know what I would change, but maybe there isn't. Maybe no answer is the answer. But
well, let's see. Now that things have gone well. I have two wonderful children. I live in a house. I'm a wonderful wife. My great family. But I think it's not going to be a tax-related career question. But I'll give you, as I look around this Engage conference, what would I tell my college self? And I kind of chuckle because I had this conversation with my wife the other day. Eat more healthy and exercise. I mean, we were talking college. I could,
you're in good shape,
but it's not easy anymore.
Yeah,
walking around here, I've got a weakness for ice cream and cake, and there's churros, there's beignets, there's ice cream, there's cotton candy. I mean, that was just in the last 35
Health and
minutes.
Wellness it's a great answer. You're right. Look after yourself. Look after your body. Right. Yeah. Like eat a little bit better. Work out a little bit more. My dad always said. My dad, he passed away like 20 years ago, but big belly, whatever, and he was like, son, it's, you put on a pound a year, you know what I mean? And then before you know it, you're like 30 pounds overweight, and he was right.
It's a constant, and except when we were in college, I would eat an entire large pizza and I was in the best shape of my life. Now, if I even smell pizza, I gain like 3 pounds. It's crazy. So,
all right. Hey, Justin, thank you very much.
It's my pleasure. Thanks for having me today.
Appreciate it.
Do you have a topic or a guest that you would like to hear on Thrive? Please let us know. Visit payx.me/Thrive topics and send us your ideas or matters of interest. Also, if your business is looking to simplify your HR, payroll, benefits, or insurance services, see how Paychex can help. Visit the resource hub at paychex.com/works. That's WORX. Paychex can help manage those complexities while you focus on all the ways you want your business to thrive. I'm your host, Gene Marks, and thanks for joining us. Till next time, take care.
This podcast is property of Paychex Incorporated 2025, all rights reserved.